Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day, and we're counting down to the next VRIC, January 21st and 22nd, 2024. Stay tuned for tickets. But of course, until then, we're having great guests for you guys each and every week. And today's guest is an economist, author, and the founder and CEO of Monetary Metals, Mr. Keith Weiner. It's great to have you on.
Hey, thanks for having me, Jesse.
Thanks for being here. I want to get started with getting your take on nations trading for energy outside the US dollar, because there's some people, if you follow FinTwit, of course, which I know we both do, things can get pretty hyperbolic. And there's a lot of people calling for the death of the dollar. This is kind of the beginning of the end. More and more nations are going to start trading for energy outside of the dollar and transacting outside of the dollar. And that is ultimately going to bring about the end of reserve currency status. You have people like Brent Johnson, who we had on the show recently, who say the US dollar isn't going anywhere anytime soon. So I wanted to get your take on is this really that significant, or is it all being blown out of proportion?
So I guess first I'll say I probably have an even more extreme version of that view than Brent does. Dollar's definitely not going anywhere anytime soon. I wrote an article. I'm trying to remember what it was called. It was something like oil, the ruble, and gold walked into a bar. It was something like that. It was kind of a pithy title. And it was talking about this idea of reserve currency status, and is the ruble backed by oil? Is it backed by gold? Could it be? All those sorts of topics. And I presented a sort of a thought experiment. Suppose you're in your house doing your thing, and your front lawn is kind of growing, turning a bit weedy, and you get a letter from the homeowners association or the town that says you better mow it, or else we're going to start fining you. And just then, ding dong, kid rings the bell. He wants to mow your lawn. And okay, how much do you want to charge, kid? And he says, I want you to give me one box of ice cream sandwiches. I don't know if you had those in Canada, but when I was growing up, that was a staple of after baseball or whatever. There was this like soggy chocolate cookie. It was rectangular with a little holes punched in it, and a slab of vanilla ice cream in the middle, and it would get creamy and really good. And on a hot summer day, that was perfect. So he wants a box of 8 of these ice cream sandwiches. So you're like, okay, and you Google it, and you figure out that the box of ice cream sandwiches would be, I don't know, let's call it $8, and you figure that okay, it's about an hour worth of work, $8 minimum wage for a 14-year-old kid with a lawnmower. That seems reasonable. So you agree to do it. And of course, then, the next trip to the grocery store, you have to buy a box of ice cream sandwiches, hand it to the kid, pay it in full. Everybody's happy. Is the ice cream sandwich replacing or even competing in any way against the dollar? No, that is not what is going on here. Number one, observe economic calculation being performed in dollars, not in ice cream sandwiches. He wants, $8 worth of ice cream sandwiches. The ice cream sandwich is not a numeraire. It's not a unit of account. And all he's doing is he's saying, pay me $8. But as you look at the kid, he's probably a bit chubby. His parents are not agreeing to let him spend his earnings. They want him to lose some weight. So they're not willing to buy the ice cream sandwiches for him. So he figures if he gets you to buy the ice cream sandwich for him, he can do an end run around, we'll call it, the analogy being the capital controls of some sort. Or let's say the Russian ruble not being tradable in the SWIFT system anymore like all the other currencies. So nothing's really happened to the dollar in this scenario. He wanted to use dollars to buy the ice cream sandwiches anyway. He had some reason personal to him why he couldn't. And so he gets you to do him the favor of remitting $8, but in ice cream sandwich form. And I think what's going on in the world is a lot of that. There was a very humorous headline. I don't know if Brent, somebody in that crowd shared it on Twitter the other day. I've been kind of off Twitter all week. We've had a company all hands here in Scottsdale, which just wrapped up. So my head's been in other places. But it was a story about India wanted to pay Russia for oil in rupees, and Putin is saying, yet, we're not going to take your stinking rupee, paying something else. And so that's the problem, right? Is even if a transaction is used in remittance, it's only bought the millisecond before remitted, and possibly sold the millisecond after remittance. And the whole thing is nothing more than a stunt in order for everybody to generate a headline. See, the US dollar being replaced. But the real question is, what currency do people choose to hold, or countries in this case choose to hold before transactions, and when they receive a payment, what currency do they choose to hold afterwards? And the dollar is the one that they're choosing to hold, even if they're swapping dollars for other things during the transactions, which I'm not sure is happening nearly as often as FinTwit might have you believe. But even if it were, what is the choice to hold? Which also closely related to what currency is all the debt denominated in. And if you want credit, you want to build some infrastructure project, and you want to raise, now I'm going to deliberately and pugnaciously stick my chin forward and say, you want to raise $10 billion worth to put in, a bridge and tunnel system in your city. Even if you're raising euros or lira or whatever, you're raising $10 billion worth of that, the economic calculation being in dollars. And how much credit is there available in these other currencies? Little to none generally. And euro, a different story, but the other currencies, little to none. And the thing that I always say on these discussions is the other currencies are all dollar derivatives. And so even if one were to swap the dollar for one of its derivatives, it's still a dollar derivative. The thing still has no independent existence other than the dollar that backs it. And Argentina is now going to prove again, which it does about every 8 years, I think, reliably, what happens when you run out of dollars defending your currency peg. And it's not going to be peso bullish. We'll just say that.
Yeah, very good breakdown. So I also want to get your thoughts on the development of regional bank failures in the US. We saw First Republic fail recently, get acquired by JP Morgan. Does this show that there's systemic risk in the banking sector? We're also seeing a lot of regional banks stocks do very poorly to the point where they're being halted. Some people have told me they think that this is kind of contained to a certain subset of the financial sector. Others think it's a contagion that could spread further throughout the system. So I wanted to get your view on where things go from here.
Yeah, I think there's absolutely a massive systemic risk. And the risk is that everybody levered up, during the go-go years. And now that the cost of credit is higher, suddenly the ability to service the debt is in question. So before any interest rate hikes, something like 20% of all corporate debt outstanding was zombie debt. The Bank for International Settlements defines a zombie as a company whose profits are less than their interest expense. Now you start hiking interest rates, more and more companies, think of it as moving the margin line up or moving the water line up. There are more and more things that are suddenly underwater. So that's one set of problems. Specifically, you look at Silicon Valley Bank, and I believe, I just haven't read as much about First Republic Bank, but I believe the same thing is true. They bought all these assets, namely, either government bonds like treasury bonds or government guaranteed bonds like mortgage bonds back in the go-go years of, let's say, 2020. And in the case of Silicon Valley Bank, they were sitting on something like a 20 to 25% loss in market value on the portfolio. And so, what happens if you have assets and liabilities? Assets are slightly higher than liabilities, but only a little bit. And then assets drop 20%. That's called insolvency. That's the technical term for that. And, to the extent that they had deposit inflows during that time, which they all did, because when the Fed is, creating more currency, that comes into the banks in the form of deposits. So they get increased deposits then. Now they're getting an outrush of deposits, which is forcing them to sell assets at a loss. And it's the selling at the loss that precipitates the awareness of the problem. Of course, the problem's actually there all along. And this gets back to something that I remember being really steamed at the time. So we had the last big crisis in 2008. And there were a lot of voices saying that, this idea that banks had to mark to market their losses on their assets was, if not the cause of the crisis, exacerbating it. And so they changed the accounting rules. And I don't know if it was March of 2009 or April 2009. And that was almost to the day that was the last tick down. And once that new rule came into effect, it was off to the races for an incredible bull market. And this is my theme, by the way, about inflation. It's a cheating. Every time something happens, these people just cheat. You imagine you're playing a board game against somebody, every time they get into a bad spot, they just pick up their piece and move it over there. And then they move the pawn forward and say check. And you're like, wait a minute. I was about to take your queen. What do you mean check? But they just pick the pieces out and move them around. Change the accounting rules, which means that a bank can say, hey, we don't have to mark these to market because we're going to deem them to be hold to maturity. Well, you could declare your intentions, go out in your backyard and yell at the clouds if you want and say, I'm never, ever going to sell this. But if you have to sell, you have to sell. And when you get an outflow of deposits, then you discover that, and then you start selling, and then suddenly people are like, wait a minute, you're taking gigantic losses. What does the balance sheet really look like? Right. And then you get the run on the bank that Silicon Valley Bank had, and that First Republic was starting to have, although I don't think it was quite as severe, or quite acute anyway. It was a little bit flatter. And there's a huge problem. And the only fix is lower the interest rates back to where they've been so asset prices can recover, and then give the banks the opportunity to be recapitalize them, at least in nominal terms.
Well, let's shift over to ESG, because there's been windfall taxes on oil and gas production. In the UK in particular, it's risen quite sharply. And you tweeted about this saying either you believe that one, man is killing the planet, and two, government should have unlimited power to forcibly stop production and trade, or else you see how suicidal this UK policy is. Now, we also saw Germany shut down its last remaining nuclear plants in an insane move that defies all logic. We've seen the demonizing of the fossil fuels industry in general by the Biden administration, by politicians in many different parts of the world. So what is the end game of these policies? And are the people in charge really this ignorant? Are they trying to score political points to get voted back into power? Or are these destructive initiatives and rhetoric being inflicted knowingly?
So I'll share an anecdote. The last time I was in London was November last year, and the weather was surprisingly warm and pretty nice. And so I was at the front desk for something or other, and there was an American woman checking in, like college age or maybe 21, 22 years old, checking in, and the girl behind the counter was also a similar age. And so the American was saying, oh yeah, how's London and what should I look for and all that, first time here. And the girl behind the counter said, well, the weather's been really good. And she was kind of smiling. And then she kind of frowned and said, which is really scary if you think about it. And I just walked away shaking my head, like, we've gotten to the point, we've programmed the minds of children to the point where good weather is scary to them. I mean, obviously warm weather in November is scary. And I think that the policies reflect the body politic. I mean, unless you have like an occupation army, think about the Soviets or the Americans occupying Afghanistan and forcing them to be un-tribal and un-Taliban-like. And what happens is they're all coming out at night and murdering your troops. There's tripwires and improvised explosive devices and all this crap, right? But unless it's an occupation army, the government, one way or the other, is reflective of, broadly at least, they may not like the particular strongman who's in charge, but it's broadly reflective of their will. And there's no question in my mind that the average person, certainly in the UK, less so in America, I will definitely emphasize that, but the average person in the UK is terrified that man is overheating the planet. And I don't know if they believe that England is going to be drowned under the waves. If anybody thinks about the sea level is supposed to rise, we're an island, we're going to go under. If anybody thinks about, well, look, 100 meters, I mean, and they're terrified, and they want policies to be effective, and they keep being told, not by just the whack jobs that are spraying ketchup on 500-year-old artwork and chaining themselves across the highway. They're being told by otherwise credible scientists wearing suits and ties. They're being told by the media, they're being told by university professors and everybody out down that, so far policies have been too little, too late. This is our last chance. Otherwise, planet Earth is going to burn in hell forever. And so I think the people are demanding it. And I think, having met a number of politicians, and without necessarily uttering words that shouldn't be uttered on a public broadcast of this nature, I'll just say, I don't think the average politician is really very different from the average voter in mentality. I think they're more clever rhetorically. They have a cunning like a fox. You say something and they spit your words back at you and everything gets twisted around. And they're pretty clever at finding that angle. In that sense, they're different. They're they're more conniving and whatever. But for the most part, and there's some politicians that I know that I think are pretty good people. But for the most part, they hold, on average, the same ideas that everybody else holds on average. But they see the angle and how to profiteer on it, obviously. I do think there's an ideological leadership of this. I think there are people that absolutely see the end game, and the end game is to impoverish humanity and reduce us down to the level that where we were, pre-civilization, called 10,000 years ago, where we ran around, little troops like apes, and we died. If it rained or if it didn't rain, if it was too cold or if it was too warm, all these things would kill people, and they were very primitive and very superstitious and prayed to the rain god and the sun god and all that. And I think that is the guiding light vision of of the left, to get us there. And everyone is, not necessarily, most people are not on board with that, but they're giving that idea a moral sanction by, terms that kind of cover it. And you mentioned ESG, right? Like most of these things, there's a legit component. So ESG is environmental social governance, right? And we're in the business, we finance mine companies. We certainly don't want to see any mine that's dumping mercury in the local river that's going to go down and poison people. So in that sense, I mean, if environment means don't poison people, then sure, of course, we're pro-environment. Who wouldn't be? I mean, unless you're like a sociopath, like some villain on South Park, hey, we're going to poison people with mercury. I mean, who thinks like that, right? But it's a package deal. And what it also means is let's tax the crap out of fossil fuels until people can't afford them anymore. And then people are literally shivering and freezing in their houses because the price of heating a house has gone up beyond the middle class's means. Social, right, means, don't have a hostile or horrible work culture. Don't be discriminatory, right? Hire talent wherever it is. Treat the local people appropriately. Of course, who can be against that? Not in modern day America in the last 50 years. But again, there's a package deal to that, which means now you have to have racial quotas and gender quotas and sexual preference quotas and religious quotas and all those things. And governance, all of these things, there's this legitimate component, and that's how they hook you. And then there's another side, which they're smuggling, which is just straight out of the Marxist critical race theory, playbook, which they don't openly name. And that's what's smuggled in with the headline.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
I want to then transition into another tweet you made about the connection between communism and people who love green energy restrictions. I think that plays into exactly what you were just talking about. Could you expand on that for us, how that kind of ideology is playing out in the political world and among the citizens as well?
Sometimes I just sit there and just think about observations and say, that's a curious phenomenon. Like if you say, what's the correlation between, people who happen to have bushy eyebrows, and people who happen to prefer vanilla over chocolate ice cream. I mean, I haven't done the plot, but I would expect it would be completely random. There's no correlation, right? They say, no, what's the correlation between people who support communism openly as such, and people who want the price of heating your home to be $50,000 a month, i.e., you can't afford it and therefore you're going to shiver? What's the correlation between those two groups? And you find there's an incredibly high, probably a 0.99 something correlation coefficient between those two. Why is that? And then when you see that, then that leads to the inevitable question: what do they have in common? And my pithy or salty tweet was attempting to get at is they do have something in common, which is they're both about tearing down, breaking down, impoverishing, and ultimately killing, making man miserable and ultimately killing him. They're both different, seemingly different, means actually not all that different in practice, right? Because they both involve the government using brute force against you, to the end of impoverishment, misery, slavery, and death. And that's what they have in common.
Yeah, very interesting. It brings to mind a lot of philosophical questions on why citizens want to see other citizens impoverished, dead, destroyed. I mean, I think there's some philosophers who've discussed that, how perhaps there's a tendency for evil at the heart of man. I don't know. That's a whole other philosophical discussion to get into, which is kind of.
If I can just share, there was a joke that was common in the Soviet Union. So there's a farmer digging in his field, and then he finds an old lamp, and he takes the lamp, and as he's rubbing it off, a genie comes out of the lamp, and the genie says, "I will grant you one wish, but whatever I grant for you, I will do double for your neighbor." The man thinks about it for a minute and says, "Blind me in one eye."
Yeah, there you go.
There's
So
an envy in the socialist ethos. It's not, nobody promotes socialism. I mean, maybe 100 and something years ago, before it had ever been tried, somebody might believe it. But today, nobody promotes socialism really thinking it's going to lead to a wealthier, scientifically wealthier society, or whatever the propaganda was in 1920. Today, they're promoting it knowing it's going to make you poorer. And that's a feature, not a bug.
yeah, very scary. And speaking of such things, last time we chatted, we touched on the insane policies implemented by governments during the pandemic and how readily so many people went along with them. Now it seems restrictions have eased up. I actually thought they never would in my home country of Canada, for example, which was one of the most draconian, over the top countries. Now nobody's wearing a mask anymore. There's no entry requirements for travel, etc. Do you think that's actually due to people pushing back against these policies? Or is this kind of a classic case of the government taking a step back, seeing what people would accept, like, okay, they'll accept it to this far, taking a step back before they come up with another way to kind of push the boundaries a little bit further? And do you think that next step could be another pandemic, climate change, financial collapse, and the introduction of a CBDC? How do you see them playing their cards next?
Well, I see them as opportunists. I like to use the analogy of like roaches. So imagine you have this huge party, maybe it starts out as a wedding, but goes until 6 in the morning, and just everybody's eating too much and drinking too much, and tables are thrown over, there's food on the floor. And then at some point, the people are gone, but nobody cleans up the mess, and the roaches come out. The roaches obviously couldn't have created the food in the first place, and they couldn't even throw the tables over. But once the tables are thrown over and there's like a huge slosh of wedding cake, that's half slid across the floor, then the roaches go to feast on it. And that's how I see the politicians who, promote these things. They're taking advantage. They're always licking a finger, putting it in the air. What's the sentiment right now? And I do think that people got to the point, perhaps slower in Canada than in America, perhaps certainly slower in California than in Arizona, where I live. We were largely done with it by end of 2020, early 2021. It was just basically done. And I think people absolutely just lost their there was a certain benevolence that people exhibited at the very beginning when they said 2 weeks to flatten the curve, 2 weeks to make sure that, you don't want to kill grandma, do you? And people said, okay, I'll go along with that. And I didn't, not because I wanted to kill grandma, but because I didn't believe an ill-fitting consumer-grade mask that leaves a gap of an inch on both sides of my nose is actually going to prevent anything. And B, I wrote about this, and I said, if there's an argument for 2 weeks right now, fast forward 2 weeks, the same argument will still be there, and it'll be another two and another two. But I think people just got sick of that. Now, versus CBDC, what I think could happen, and now we're trying to predict, most of that trying to study monetary economics and treat it as a science and make certain predictions based on how things work on a scientific basis. But now we're just predicting, like, what are humans going to do? I think when there's enough fear and people have suffered losses, and the government comes along and says, we have a solution, people will turn to that, not because, I guess if the analogy is there's a giant wedge of cheese in the mousetrap, they're willing to ignore the spring-loaded thing because, cheese, right? And, I've thought for a long time, if the government really wanted to try to grab a huge amount of people, I think you confiscate gold, I'm like, you wouldn't get very much. But if you really wanted, if it was about a loot grab, what you'd do is you'd say, to be eligible for, continued tax deferral status in your IRA or 401k, 50% of your account has to be in these spiffy new government retirement bonds, which we're going to issue, conveniently. If you timed that, if you're the roach, you have to wait for the table to be flung over. If you time that to the moment where the stock market's crashing and everyone's losing a huge amount of value in their 401ks, and now you say, here's a government retirement bond, which pays an extra special high interest rate, call it 6%, doesn't even matter what it is, 7%, I don't know. I bet you wouldn't have to impose it by force. I bet people would willingly leap into that. And then the same thing with CBDC. If people are terrified of losses in the banking system, and now the Fed says basically you're going to have a direct account at the Fed and you don't have banking system risk. I see voices that are perhaps mislabeled, but in the sound of money community, talking about a so-called narrow bank, which, okay, if you just strip out, why would you give some rent seeker the ability to operate that? Why wouldn't the Fed just do it directly? Then everybody can finance the government's debt directly without banking system risk. And if people are losing deposits in banks, then I bet they would leap to that, similarly as they would with the 401k thing. The only obstacle I see towards that path right now is I'm not sure that there's any political will to let anybody take a penny of loss as a bank depositor. I think the powers that be are frantically, desperately scrambling to not have any losses. And so maybe that's one that they have to table for now, but maybe that's not a 2023 agenda item.
So I want to end on gold and silver and where you see them positioned as we're here with massive government debt obligations, the potential of a looming recession, continued geopolitical turmoil. I know you take a more measured approach to the sector, unlike a lot of the gold bugs, the doomsday people, etc. And it seems like you're more rational in your analysis. So how do you foresee gold and silver performing here in 2023 and beyond?
So it's interesting just how robust the price of gold is, less so silver, obviously. Given how unloved it is, I mean, it's the opposite of any kind of bubble mania. Just picture Tesla at its peak, or any of these stocks. When there's a mania, I mean, the analogy of the shoeshine boy telling you, the hot stock tip, buy Tesla, because Elon Musk is a genius, is going to, when man finishes off Earth, he's going to bring everybody to Mars or whatever, belief. Gold is the opposite of that. It's unloved. It's the bastard stepsister, stay at home and mop the floor while we go to the ball kind of thing. And yet here it is, almost at all-time high in US dollar terms and making new all-time highs in many other currencies. let's not forget the other currencies too. And that's because people are, obviously aware of the systemic risk in the banking system. And just because the spotlight's on the US banking system does not mean that there aren't even bigger problems in the European banking system and the Chinese banking system, just to name two big banking systems. Just the spotlight's on America at the moment. And so people turn to gold, as they always have. Gold is money, and money is the thing you hold when you don't want to invest or speculate in anything else. I mean, you could buy real estate, sure, but real estate is incredibly credit sensitive, and if there's going to be a credit crisis, then there could be a repeat of 2008, and home prices could crash by 2/3 or 75% or something like that. So people turn into gold, and interestingly, monetary metals, we have a model that calculates what we call the fundamental price. And by the way, the graphs are all available on our website, and we update them daily. This is all free on our website. What the model does is it attempts to back out the effects of the speculators. Because the speculators are using leverage, playing in the futures market, you can get 20-to-1 leverage. And so, the speculators can at least temporarily stretch the price in one direction. If they're pessimistic, they can pull it down. If they're optimistic, they can pull it up. And there's been times that when you say measured, I got hate mail when, I don't know if this was in 2013 or something, a long time ago. And price of silver was $23, $22, something like that. It come down. This was obviously after the 2011 peak. And, there was a bit of a rally and it was coming down. And everybody was all hopeful it's going to go back to 50 and then 250 and beyond. And I said, right now, this market is very distorted. There's a lot of optimism. The speculators are really holding high. Its fundamental price would be 16 or 15. However, or something, picture a rubber band stretched between two pins, right? If you stretch it this far and then you let it go, it isn't going to just come to rest at neutral. It could overshoot in the other direction. And if it does, we'll see a 12 handle on silver. And we saw an 11 handle after that. But anyway, before that happened, I got hate mail. What are you trying to do? Crash the silver market? You bastard. Who do you work for? You must be a paid shell for the Fed. All this stuff, and I was just looking at a model in this particular case. So our model is saying, gold around $2,200 and silver at, say 28, something like that. So it's been a couple of days since I looked at it. Doesn't tend to move that much. The model value tends to be more stable than the market price value, which is a very interesting phenomenon itself. And, the model's not perfect. And of course, every day, the fundamentals are changing. But what the model is saying is that, yeah, gold and silver are a bit unloved. And, if the speculators who really unlove it were to back out of the market, you'd get a higher price that the metal were clearing, which kind of supports the broader macro thesis that it's unloved. And yet the price is so high because there's so many people that are nervously eyeing systemic risk and currency risk, and not in the US dollar, but all the other currencies. I mean, what should you have been doing if you were in Argentina and pesos before this, latest leg down in their crisis? You should have been buying gold, and anybody who did would be, or dollars, obviously, but anybody who did would be fine, and anybody who didn't is regretting it now for sure.
Yeah, absolutely. We'll really appreciate having you on today, Keith. For those who want to learn more, could you fill us in on monetary metals and anywhere else you'd like to direct people online?
So monetary metals, we pay interest on gold. It's not about betting on its price, but about putting the gold to do something productive and paying investors a return on it. Isn't it better to be paid interest on your gold rather than to pay storage fees on it? We're monetary-metals.com, and I am on Twitter at @RealKeithWeiner. It's my Twitter handle.
Great. Well, I'll put those links in the description below so viewers can check that out. Always awesome conversing with you. You always have a unique take, and I would love to have you on again some point in the future.
All right. Thanks so much, Jesse.